Welcome back everyone to InvestQ, and today we're going to be talking about Rezolve AI, ticker symbol RZLV. And what I want to touch on today is regarding a few comments that I have received over the past few days. And basically, two of my subscribers, shout out to you Craig67212 and shout out to you 3051RA. We're going to be talking about how Craig has said that he's heard that revenue is reportedly closer to $500 million. And we're also going to be talking about with 305R1A how he wanted me to cover a little bit more about the company, because in the last video, I will be honest, maybe the coverage that I did on the company in the previous video wasn't deep enough. So he just wanted me to dive in a little bit deeper, specifically talking about the partnership with Microsoft and Google, the buyback program of 300 million shares, and their target of $100 billion market cap within a 5-year period. So today, I want to use publicly available information to break down each of these topics to show exactly what it is management has been discussing and what they've been communicating to the shareholders and investors. So let's get started. Now, I want to first cover this right here about the $500 million revenue. So the thing about it is, there is a little bit of a misconception. He's not necessarily wrong, but there's just a little bit of a caveat. It's just a tiny misconception is all I'm saying, because right now, with what management's guidance and the publicly available information, that's not exactly what's being said, that they are set to have $500 million in revenue. So the thing about it is, the key term that I'm going to be using is ARR. And that stands for annual recurring revenue. And I want to use an example. Think about it like a gym membership. Imagine that a gym has 1,000 members paying $10 every month, and the gym generates $10,000 this month. So if nobody else joins or leaves right now, you could reasonably estimate that the gym is on pace to generate $120,000 over the next 12 months. That's essentially what ARR represents. It's the annualized value of recurring revenue based on the current run rate. Now, what management means when they talk about a $500 million ARR exit rate, they're referring to where they hope the business will be running by the end of 2026. So another analogy I want to bring about is, think like you're driving a car. If you're traveling 70 miles per hour when you cross the finish line, that doesn't mean that your average speed for the entire trip was 70 miles per hour. It simply means that that was what your speed was at the finish. That's the same concept here. And management is talking about the annualized pace of recurring revenue at the end of the year, not total revenue earned throughout the entire year. So based on the current guidance, it does appear that Rezolve AI projecting approximately between $350 to $360 million in revenue. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. Now, that is different from saying that they're reporting the revenue to be at $500 million for the fiscal year of 2026. Revenue is measuring what the company actually recognized over the year, and ARR is a forward-looking recurring revenue metric, if that makes sense. Please comment below if that did make sense and that broke down the question that Craig had for us. And again, shout out to you, Craig. Thank you for subscribing, and thank you for commenting and showing some engagement in my videos. I really appreciate it. Now, I do want to make it clear, though, that even though that these metrics are different, ARR is still extremely important, because software businesses are often valued based on recurring revenue, because recurring customers can create predictable cash flow over time. And if management can execute successfully, today's ARR can translate into the future reported revenue. And that's one reason that investors are paying close attention to both of those metrics. Next, let's talk a little bit more about RZLV and their partnerships with Google and Microsoft. So Another topic that, again, shout out to you, 3051RA mentioned, he wanted me to talk a little bit more about their partnerships with Microsoft and Google. So, oh, wrong tab. So, rather than, I want to make it clear that this was one of the topics he wanted me to bring up. And rather than building on enormous sales from scratch, Rezolve AI has been working to leverage existing technology ecosystems, and the company has partnered with Google Cloud. Management has discussed Google helping distribute Rezolve's Brain Suite platform through its ecosystem and potentially giving the company access to a much broader customer base than it could likely reach on its own. So, Rezolve AI has also integrated its technology with Microsoft Azure, and that places its software within Microsoft's cloud marketplace, and it gives enterprise customers another channel through which they can discover and purchase Rezolve's products. According to company statements, Rezolve has also strengthened this relationship by bringing on leadership with Microsoft experience to help expand those efforts. And if these partnerships continue gaining traction, they could become an important part of Rezolve AI's long-term growth strategy. However, investors should remember that partnerships alone don't guarantee financial success. The real question is how effectively those relationships convert into paying customers and sustained revenue growth. The next thing, touching up a little bit on the buyback program. So, specifically with that, Rezolve AI buyback program. Excuse me. So, first thing that I want to be clear, the buyback program was not for 300 million shares. The buyback program was for $300 million worth of shares. So I just want to make that clear. And shareholders approved a plan allowing the company to repurchase up to $300 million worth of its own shares. And that is subject to the necessary approvals and implementation process. And it's important to understand exactly what that means. So, to be clear, this is not the same thing as announcing that the company has already repurchased $300 million of the stock. That's not the case. Instead, it gives management the authorization to buy back shares over time if they choose to do so. And companies often pursue share repurchases when they believe their stock is undervalued or when they want to return capital to shareholders. If executed, buybacks can reduce the number of shares outstanding, which may increase each remaining shareholder's ownership percentage. But whether the company ultimately repurchases the full authorized amount depends entirely on future management decisions and market conditions. And last, I want to be talking about the bull case and the long-term vision, which also touches up a little bit on the $100 billion market cap goal that they have within a 5-year period. So 100 billion market cap goal. Okay. So again, obviously this is not an official thing. It's just a goal that they have. Oh, let me see if, hold on. Yeah. There we go. Yeah. So, so sorry for a little bit of the delay, but just to be clear, again, it was not necessarily that they stated $100 billion for sure. But again, this is just projections from management, and it's actually projected to become a $144 billion market. So that's 44 million more than I was expecting. So just to be clear, this is the long-term bullish scenario for the company. Again, it's a projection and it's a scenario. Nothing is certain unless management executes and it actually becomes a reality. So for that kind of outcome to even become possible, several things would likely need to happen. First off, the overall AI commerce market would need to continue expanding significantly over the coming years. And the second thing would be that Rezolve AI would need to consistently execute by growing customers and increasing recurring revenue, and maintaining strong financial performance. And the third thing would be partnerships with companies like Google and Microsoft. Those partnerships would need to translate into meaningful commercial success rather than simply remaining strategic announcements. And in other words, there's certainly a path that is showing optimism, and it's making investors very optimistic for the stock, but there's also substantial execution risk along the way. So I just want to make that very clear. Now, my biggest takeaway when talking about Rezolve is the company is not currently guiding for $500 million in recognized revenue during 2026. Management has discussed a $500 million ARR exit rate, and these are two different financial metrics. Second, the partnership with Google and Microsoft are interesting because they may help Rezolve AI scale its customers, and it may help them scale more efficiently. The third takeaway I want to point out is the authorized share repurchase program could be meaningful if management decides to execute it over time. And finally, while the long-term opportunity has attracted many bullish investors, the company still has to prove it can continue executing quarter after quarter. And as always, I'll continue following Rezolve AI's earnings reports, their partnerships, customer growth, and guidance to see whether management continues delivering on its objectives. So if you found this breakdown helpful, be sure to hit the like and subscribe button, and also comment below if there's any other questions you have on the company or what it is you think about Rezolve AI. So with that being said, guys, David with InvestQ out. Stay safe, keep making good decisions with your long-term portfolios, and I'll see you all in the next video.